Good day. My name is Premjit Singh, and I am a PhD candidate at Ahmad Ibrahim Kuliah of Laws, International Islamic University, Malaysia. Today, I will be presenting on my article titled Analysis on Malaysian Non-Performing Loans and Financing Sale, Effects of COVID-19 and its Legal and Regulatory Framework. To begin, we shall first discuss the abstract of the article. With COVID-19, banking and financial relief measures coming to an end, it is viewed that there will be a growth trend and change in Malaysia moving forward surrounding financial institutions' behavior in dealing with their non-performing assets, including disposing the NPLs covering all product range. The purpose of this article is categorized into two areas. First, analyze the Malaysian market trends in disposing NPLs, as well as COVID-19 impacts. 2. Examine the current legislation and regulations governing the sale of NPLs. First and foremost, it is essentially important to assess the term non-performing loans and non-performing financing. Typically, in the academic and official sector, it is widely used as an indicator to assessing creditworthiness of a financial institution. It occurs when a borrower is in default of the loan for a period of time. NPL definitions, however, differs across jurisdictions. Several key global institutions have taken the lead in hope to synchronize the term. The EBA, as one of the leading institutions, defined NPL as either 1. Material exposure, which are more than 90 days past due, or 2. The debtor is assessed as unlikely to pay in full without realization of collateral. In addition, Basel Committee, as part of the Bank for International Settlements, defined NPLs as 1. When an obliger is unlikely to pay its credit obligation in full or is past due for more than 90 days. 2. All exposures are credit impaired. Or 3. There exists material exposures that are more than 90 days or there is evidence that full repayment is unlikely. IMF, in its recent Financial Soundness Indicators Guide of 2019, held that NPL occurs when payment is past due by 90 days or more, interest payment equivalent to 90 days or more have been capitalized or delayed, or evidence exists to reclassify a loan as NPL in the absence of 90 days past due payment. As we have now discussed NPL definitions issued by the leading institutions, we shall now examine from a Malaysian perspective. Pursuant to Bank Negara Malaysia guideline, NPL occurs where payment is past due for more than 90 days, for revolving credit facilities when the outstanding amount has remained in excess of the approved limit for a period of more than 90 days, in the absence of the 90 days past due period but exhibits weaknesses of repayment, or for repayment scheduled on a periodic basis of 3 months or more, the loan or financing shall be classified as an NPL as soon as default occurs. Next, in terms of NPL statistics, we examine data of 24 countries in Asia for 2 consecutive years, as well as Malaysian data from December 2018 up to August 2021. We notice that in Asia, there is an increase from 4.25% to 4.65% between 2018 and 2019. As for Malaysia, it can be seen that there is a steady growth from 1.48% in December 2018 to 1.67% in August 2021. It is also viewed that Malaysian NPL may increase by 2-folds, up to 4% by end of 2022. With NPLs, there are several best practice resolution methods that is typically used by financial institutions globally. The 5 best practice is internal workout, asset protection scheme, securitization, asset management company, last but not least is direct sale. This article discusses primarily on a direct sale aspect. NPL sale in Malaysia is typically uncommon in comparison to our regional peers, for example, in Thailand, Indonesia, and India. This is a result of a consistent recovery since 1997-1998 Asian financial crisis. Due to tax benefits, banks are also inclined towards NPL write-off. However, there seems to be a shift in preferred resolution method in more recent years. CIMB and AMMB holdings have started the ball rolling again in their recorded sale. MBSB have announced their intention to sell their NPLs to third parties. In terms of COVID-19 impact on NPLs in Malaysia, B&M data recorded a 9-year high at the end of December 2020, and it is anticipated that the ratio may rise by more than twofolds up to 4% by the end of 2022. Deloitte Malaysia opined that the extent of increase will be realized once all moratoriums comes to an end. International Finance Corporation views that high levels of NPLs may become a major problem for emerging economies, stalling credit flow and impending growth. Thus, resolving NPL is crucial. Collections Group, the largest NPL acquiring firm in Southeast Asia, expects an increase in NPL sales post-COVID-19 pandemic. During the COVID-19 pandemic, many borrower relief programs were introduced. During this period, NPL aggregates continues to remain stable. Maybank Kim Eng research finds that if nearly 10% of such loans under the relief program goes bad, NPL in the region could be significantly impacted. Next, we shall examine and discuss the Malaysian legal framework in order to complete a successful transaction for the sale and purchase of NPLs. The fundamental legislation is the Financial Services Act and Islamic Financial Services Act, both of 2013. This is followed further by guidelines issued by B&M. The FSA and IFSA provides that B&M approval is required for any agreement or arrangement for a scheme to transfer the whole or part of any business of a financial institution. Given the wide meaning, a policy was issued by B&M in 2016, clarifying that for purposes of NPL transfer via sale, B&M approval is required. The guidelines issued by B&M governing the sale of NPLs require certain requirements to be met. First, NPLs can only be sold to locally incorporated companies which is majority owned by domestic shareholders, given the foreign equity cap of 49%. Next, the sale must be communicated to the borrower. Thirdly, must not contravene Banking and Financial Institutions Act. And the fourth, does not effect any debt restructuring agreement. Additionally, pursuant to FSA and IFSA, the application to B&M must consist of the following information: approval from the seller and purchaser's board of directors, details of the proposed transfer, the values, as well as the purchase consideration. Where the purchaser is a licensed person, a report on the assessment made on the risks of acquiring the NPLs and infrastructure readiness. Where the purchaser is not a licensed person, details of its shareholding and beneficial owners is to be shared to B&M. And B&M reserves the right to request for any information. Upon securing B&M's approval, the seller shall publish the intention to make an application to the High Court in the Gazette. Subsequently, the parties shall make an application to the High Court, and the High Court may approve, amend, or refuse the application, exercising its discretion. Once approved, the order will provide for an effective date to the transfer. The order must then be published in a local newspaper. Last but not least, within 30 days, the seller shall deliver all documents to B&M. B&M, in its recent Financial Sector Blueprint 2022 to 2026, reveals plans to enhance NPL sale and purchase framework. As a recap, the current guidelines requires the purchaser to be a majority locally owned entity with a foreign equity cap of 49%. The blueprint is proposing to remove the restriction. During my interview with the Age Malaysia, in my capacity as a Chief Legal Officer of Collections, I viewed that this will attract greater participation, creating transparency and competition in the industry. As a conclusion, B&M has certainly played an important role in ensuring our NPL definition is on par with international standards. As for market trends, it is observed that there is a gradual shift, and it is expected for more sales moving forward. In 2019, Donald Joshua Jagannathan, the then Assistant Governor of B&M, held that a clear legal and regulatory framework will shorten the sale and purchase process and reduce the discount factor. A positive inference may be established that there are incoming initiatives by B&M to enhance the existing framework as seen in the financial blueprint. I hope this has given you an understanding on my article, and I thank you very much.